Is this the beginning of a new bear market? Just feels hopeless sometimes. It seems liquidity is being drained at a fast rate and the Fed's dual mandate means that they don't care about the stock market anymore. X200B. The S&P 500 is basically unchanged over the last 30 months. And inflation has run around 15 over that time. X200B. Never seen a bull market in which bank stocks keep falling, retail stocks keep falling, transport stocks keep falling, industrial stocks keep falling, healthcare stocks keep falling, real estate stocks keep falling, material stocks keep falling. X200B. Any advice for those of us who wish to be optimistic and somewhat bullish? Thanks. Sell when the sub is optimistic and start DCA when the sub is bearish. A formula that always works. As Reddit is the new shoeshine boys. If you're going to be this despondent, perhaps equities are not for you. Consider a HYSA, bonds, etc. For my part, I'll continue buying and riding it out with my shorts. Let us know when you sell it all. That will be the bottom. Investing is not a short game. It's a long game. You should play the long game. I heard some random dude once say it's time to buy when others are fearful. Patience you must have, my young Padawan. Beginning? We're lower than we were 2 years ago. We've been in a bear market for quite a while now. No, it's the same bear market continuing. I see a whole wave of shit stocks that IPO'd in 2020-21 now either beaked, delisted or reverse split and pounded to oblivion. It was criminal some of the valuations they were listed at. The big boys of tech are holding up and still riding that AI summer pump. Banks and financials are pretty beat on. Solar stocks nuked. Energy way up. If you just bought oil and shorted solar under Biden, you'd be doing great. It's just a tough market if you're not playing the bear side. Otherwise, buy chunks of decent companies and SPY VTIQQQ on the way down. The S&P 500 is unchanged for 30 months because it went up way too much from 2009 to 2021, 16 a year. On average in a ridiculous and ill-advised zero interest rate environment. This is why we very well may go this entire decade with minimal returns so that reversion to the mean plays out. For new young investors, you need to look at this as an accumulation era and not expect the returns you saw in the last decade. If interest rates remain above 5, a lot of people will just take that guarantee. In regards to this being a new bear market, well, I would not say this is the beginning because after all we just corrected 10. Bear markets come and go, but we will be around for a much longer period of time. If you are cost averaging money into the market across a long period of time, then your long-term financial success will more likely than not be realized. We will not have a 30 fall and a 43 artificial rise in SP performance because cost of borrowing then was almost free. Unless Powell declared Feds is done with interest hike and is aggressively reducing borrowing rate, you will not expect to begin a growth cycle. Personally, I don't see inflation will go away anytime soon. Best start believing in bear markets. You've been in one for some time now. It's not a fun time. But the blood hasn't even started running. Stocks are on sale. Have an adequate emergency fund and keep buying. This market, right now for the foreseeable future, is the cheapest stocks you'll buy in your lifetime. They might dip another 10, 20, 30, but they are on sale now. And 10 years from now you'll look at the 2020, 2024, 5 market as the greatest buying opportunity of your life. Bear market is rapid and must be followed by panic. What would cause bear market right now? The only thing is that big funds flip their assets and they want to be in stocks once there's first signal for Fed to start lowering rates. So they jump in and out. High rates will cause weak businesses to lose their financial fluidity and bankrupt. Did you see anything like that happening yet? Have you seen layoffs to prevent bankruptcy? So far I can see layoffs to keep margin high to have better stats on stocks. Companies did great job at creating fake inflation and raise their prices. It's people who are fucked. I don't think you realize how common it is to have a 5-10 drop in the markets. In fact, on average there's a correction of at least 5 every 71 trading days. And corrections of 10-20 recover within 4 mo on average. The Dow hit a high in September 1929 and never revisited that high again until 25 years later. That's a bear market. I'll keep buying even if in paper everything looks red. If you're young, let's hope so, make sure you have the willpower to be a buyer and if stocks go lower. If you're older, in my view, now would be a great time to take the barbell approach. 50 stocks, 50 treasuries. The idea of the barbell is to have one extreme in risk and the other in safety. By the way, the great thing about this market right now is that there is enough flavor for everyone. Take advantage of it as these dips, however deep, often rebound in the blink of an eye. Don't be the person who says I wish I would have bought more. This is the time to load up and wait for better times long term. The Fed should never have cared about the stock market. That only started with Greenspan and unfortunately continued until recently. The stock market has never been the economy. And that is even more true today with the gamification of stock trading. The Nasdaq is down to where it was in June and still 2K points higher than January. The market doesn't feel hopeless yet. When the investors start to feel the way first-time home buyers feel now, then it will be time to buy in big. Otherwise just DCA into companies you believe in and index funds. 493 stocks in the SP 500 are flat or down. The entire fake runs you've seen the last 2 years have been driven by only a handful of stocks. Because there was nowhere else for money to go, capital fled bonds. Once the bond market normalizes a tad, the stock market will likely absolutely shit itself. SP 500 is up 50 over the past 5 years. Are we really in a bear market? Am I missing something here? On average, market goes up. I am 70 in 3-month T-bills. I am buying div aristocrats that have been beaten up and have lower pay and over 3 yields. When the market comes back, these will too. If a stock cuts the dividends, I sell. Personally, I'm glad to have some tax deductions, building up a nice yearly income from the dividends. Look at the 60s-70s market, and you shall see a market like that. Stagflation. We've been in one since end of 2021, I'd say. There's no such thing as a bear market, let alone a clearly defined beginning and end of it. The market is an ever-continuing roller coaster that goes up and down for uncertain amounts of time. Enjoy the ride. An opportunity is coming. One which normally people only see a few times in their lifetimes. If you're fully invested and have a plan, i.e. DCA, then short-term fluctuations shouldn't affect your long-term positions. If you're older and don't have the ability to withstand a bear market that could be considerable, given market historical valuations, I'd be cautious. Is this the beginning of me unsubscribing our stocks? Why, yes. Yes, I think it indeed is. Someone is clearly selling, not sure why retail always feels the need to hold the bags.